Hey, it's Kevin the Credit Crusher here, and we're coming with another credit tip. So today we're talking about home equity loans or home equity lines of credit and the dangers that they can cause you. Before we get into our conversation, as always, like, follow, share, and subscribe on all of our social media platforms. You're looking for the name Premisien. That's Premisien. If you're on YouTube, hit that notification bell so we can notify you anytime we have a new video. So let's get into a short conversation about home equity loans and home equity lines of credit. First and foremost, let me explain to you guys what they are, and then let me advise against the dangers of what they can do to your credit. A home equity line of credit or home equity loan is what you can get if you have a house. It's a mortgage house, so you're paying a mortgage on that house and you've built up some equity in the house. You can get a loan or a line of credit to do with what you choose, but you have to be careful about that line of credit, particularly if you're trying to get that loan or line of credit to pay off some credit card bills or some student loan debt, because it could cost you more than what you would pay if you just continue to pay the debt off. So let me explain the mechanics of a home equity loan. Let's say you have a house. You bought the house for $100,000 and you've been paying the mortgage. The house has appreciated in value. Let's just talk about appreciating value. Don't worry about the paying off the mortgage and what that does. But let's say you bought the house for $100,000 and some time has gone by. Now the value of that house is $150,000. So you now have a $50,000 equity piece or equity stake in that house. You can go to a bank and take out a loan on that $50,000 worth of equity. And they can give you, many companies can give you up to 100%. Some can give you more than 100% for the equity, but let's say they give you 100% of the equity, which means they'll give you a loan for $50,000. Now, a lot of people, they use these equity lines or equity loans to pay off credit card debt. If you have $50,000 worth of credit card debt, you go in, you use that money, you go pay the credit card debt. Now, that only makes sense in two instances. Two things have to be present for that to make sense. The first thing that has to be present is the interest rate on the home equity loan has to be lower than the interest rates on the credit card that you're paying off. And they have to be lower than the interest rates combined and how the credit cards do it. So if you've got a credit card that has a 9% interest, it doesn't make sense to use a home equity loan that is a 12% interest at a 12% interest rate to pay off that credit card. You might as well just get the credit card, because that loan you're going to have to pay back just like it was a credit card. You're going to have a monthly payment. What you're doing is consolidating, but you're consolidating at a much higher interest rate, and that just doesn't make sense. So one of the things that has to be present for you to take advantage of a home equity line or home equity loan is the loan or line has to have an interest rate that is lower than the collective interest rates of the debt that you're paying off. The other thing has to be present, and this is extremely important, is you have to be disciplined not to use the credit that you're using that home equity loan or line to pay off. If you've got into credit card debt of $50,000, then it's a great chance that you're going to get into that same kind of debt. You don't have a debt problem, you have a spending, and it's not a problem. I don't want to shame anybody. It may not be a problem. It's just you have to change your mindset about the way that you're spending. But if you go get this home equity loan, $50,000, you pay off $50,000 worth of credit card debt only to turn around and use those credit cards again. Now you're paying not only the credit cards, but you're paying the home equity loan, and now you're further in debt than you were when you got it. So the two things that must be present is you must have an interest rate that is lower than the debt that you're paying off, and you have to be disciplined enough not to use the debt that you're paying off. Now, if you are using a home equity line or home equity loan to invest in something, you got to, again, two things have to be present. Or one thing really needs to be present, and that is whatever you're investing in has to generate you more in interest than the interest that you're paying on a home equity loan or line. So, and we see this all the time. People go get that $50,000, they go invest in another piece of real estate. That piece of real estate brings them 8% return on investment, but they're spending 12% on the home equity line. Didn't make sense. Yes, you got a lump sum from the sale of that piece of property or the rental of that piece of property, but what you're paying back in interest for that loan is more than what you made back in the sale or the rental of that property. So again, you have to know the interest rates on what you're borrowing versus what you are putting that money into. All right. I've also seen people finance their children's college education. And I have to tell you, that is where a lot of parents get into trouble with these home equity loans and lines of credit, because you're financing, you still take that same $50,000, you go pay the student's tuition. You've now paid, again, 12% when you could have gotten a student loan. I don't suggest you get student loans if you don't have to, but you can get student loans and the interest rates can be lower. Again, 7%, 8%, even as low as 3%. So the best way to use a home equity loan or line of credit is to make sure that whatever you're getting it for costs you less than whatever you're putting it on. So only if the interest rate is lower, and only if you have the discipline to take care of the debt should you use a home equity line or loan and finance. People ask all the time, well, if we don't use this equity, what should we do? And I say to them, use it, find something that can generate you a greater interest rate, and then use the difference between those interest rates to purchase whatever you're trying to do. Let me give you an example of that. If you get a home equity loan and you can find a stock, or nowadays you can invest in, this is not financial advice, so I have to make this disclaimer before I go any further. This does not constitute financial advice. We are not financial advisors. We are just giving you some opinions. This is all opinion, and you might find an opinion that is contrary to what we're saying. But if you can find an investment, cryptocurrency, NFTs, stocks, bonds, annuities, whatever you can find, if you can generate more interest, invest in someone else's business, invest in a real estate project that somebody else is doing, or your own real estate project. If you can find something that you can invest in that brings you a greater return in interest than your home equity loan or line, then use the difference. So if you get a home equity loan for 12% interest, you find something that yields 20% interest, you invest in that, you now have 8% interest difference, and that's what you should use to pay off your debts. So that's what you should use to pay off your credit cards, that 8% difference. So let's say, doing some math, let's say you are paying, let's say you're paying $1,000 per month on the home equity loan. You are making $1,200 a month in the interest generated, the principal plus interest generated on the investment. The difference is $200. You take that $200 and you apply that to your credit cards. Instead of trying to pay the whole $50,000 on your credit cards, just take that $200 a month and apply that to your credit cards. Again, it's going to require discipline because The $200 extra that you're getting, you have to put it onto your credit cards. You have to, one, remember to put it onto your credit cards. And two, you have to remember not to use the credit cards. You have to put the credit cards away, not use them, because you're wasting your time. It's a futile effort. So be very, very careful before deciding to take out a home equity loan or line of credit, making sure that whatever you're using the money for is going to generate you some income that is greater than what you're going to spend on that home equity loan or line. All right. That's our advice. Once again, hit that like, share, subscribe button, hit the notification bell on YouTube. Stay tuned. Watch this and all the rest of our videos, and we'll bring you some more great credit tips and credit hacks.